Legends. Legends. Am I up and running? I'm up and running. Sorry, Legends. My internet went down. It's been down for the last 15 minutes. I don't know what was going on. Had to reset it a bunch of times. But we're here. We're here. Welcome to the Daily Buyer Show. It is the 3rd of December and crypto is having a nice little pump, a little bounce, let's call it. We are seeing a bounce, right? Yesterday we had a move. Well, the day that just closed, we had a nice bounce. Pretty much reversing the prior day's sell-off. But we're going to dig into that today because we are still in the volatility window, right? The thing we've been talking about these last few streams, especially as we kicked off December, is that we opened December with a heavy macro calendar coming into the end of the year, coming into seasonality where crypto historically has some pretty good returns. However, given the current structure and the current environment, we've been having some mixed conditions, right? We're macro bearish, but we're potentially preparing for a counter trend rally. The bounce today, I'd still chalk that up to volatility, right? We've got this potential front running of the rate cut. We've got the December rate cut next week, which at this stage, the market believes is all but certain. And I wrote a note to myself here where typically when this happens, we've got to be cautious of front running of the rate cut as we're heading into the week. So we'll see this volatility where, now that the rate cut's all but certain, the week leading in, or the week prior, I should say, and then the week of leading into the rate cut is likely to be highly volatile. And what then often amplifies that volatility, could be in either direction, is when they do the actual press conference. So when Jay Powell actually speaks, right? Because in the market's digesting his tone and his sentiment. And given the current environment where liquidity conditions are still quite tight, we've got a pretty tight balance sheet from the Fed. They've been doing QT for some time now, which is supposedly ended. I saw this from the Kabasi letter, has officially ended quantitative tightening. Now, if you just look through the comments here, immediately liquidity incoming. I mean, this is very optimistic for QT ending. All right, money printers turn on. When in fact, when QT ends, it doesn't actually mean that the Fed is necessarily expanding the balance sheet, right? It just means they're stopping the contracting of the balance sheet, of the reduction. So we've been saying over and over again, this is QE. When the balance sheet is getting expanded, that's the money printer going on. Now, unless there's some other type of stealth QE, right, QT ending should just level out the balance sheet. Now, that could provide some short-term liquidity, right, because we're not draining. But to validate being bullish based on this, based on QT ending, right, we have to be observing the balance sheet. Hence, all of that's built into our net liquidity indicator. If you need this indicator, just DM me on X. Something I made that aggregates the Fed's balance sheet, the TGA account, and the reverse repo market. We want to see this continue to tick up. That will tell us that the supply and flow of liquidity is actually expanding, not just the speculations. Okay, so now we're validating through the data that this is actually going to mean something. And that's hence we want to be watching the balance sheet. We want to be watching net liquidity. So coming back to the pump that we're seeing today, right? To me, this is the expected volatility we've been discussing, right? I'm not rushing into anything here. Even if you look right across crypto, well, the day's just ticked over, so we've got a new day opening. But you look at some of these charts, and I think I saw Pengu was up about 25%. We had Pengu, what else? Brett was up about 30%. The key thing I want to bring to your attention here, though, is a lot of these charts could just be creating, or are likely creating, the next weekly high, right? So that's what we got to be on watch for, is the fact that a lot of these charts are in a macro bearish structure. Even if we just go back to Bitcoin, like we've been discussing, when we look at the weekly chart, the weekly is now bearish, right? And we're waiting for that weekly retracement to short. Okay, so hence, this current volatility is expected volatility as we lead into the key catalysts, right? We've got the rate cut next week. We've got QT speculated to end, and we've got the TGA, the government, speculated to start spending, right? All of that will come through in our net liquidity indicator, and a lot of that data will get updated in TradingView tomorrow, I believe. So we'll start to see that in the data as long as we're monitoring net liquidity, and at the same time then monitoring price action in Bitcoin. Okay, so there's no reason to rush in here. There's no reason to be overly bullish, euphoric. I'm not bullish at all, in fact, because it's still a downtrend. On the daily, it's still a downtrend. On the weekly, it's still a downtrend. So we need to be balanced in our approach, in our emotions towards markets. You know, we need to stay level-headed. I've already noticed, a lot of X celebrating the bounce, and so far it's just volatility, just standard volatility, right? When a chart's beaten down so much, and we are expecting, right, a new weekly high to come in, well, price has to go up to do that. You can't just be celebrating every small up move, thinking we're in a bull market. So let's just layer in that context and stay balanced before we get too excited. Now, just a refresher on my bias and my position. If we just come back to my Substack that I put out a couple of days ago, I do this every week, usually on a Monday I post it, which might be a Sunday for most of you around the world. My macro bias is still bearish, but the conditions for a counter trend rally are forming. Right? The next 2 to 3 weeks will decide whether December becomes a choppy transition month, or the start of a larger move into Q1, right? And that's based on these key liquidity catalysts. And I'll go back to my notes here. We've got the key liquidity catalysts. So the rate cut in December, QT potentially ending, the government actually starting spending. On the other side, we do have to, as in on the bearish side, potentially a drain on liquidity, a risk to global liquidity, is Bank of Japan. We've just got to keep an eye on that because their rate decision is in a couple of weeks. And I discussed it in my last 2 streams. Japanese liquidity underpins a lot of global liquidity. Okay, and if they raise rates, it incentivizes money to stay in Japan or go back to Japan. Hence, we need to just keep an eye on that Bank of Japan meeting that's happening in a couple of weeks, right? But we're also monitoring the USD JPY and the Nikkei to understand the market's actual response and how it's interpreting and digesting and participating, I guess, in conjunction with what the Bank of Japan actually does, right? So hence these 3 liquidity catalysts, to me, they don't suggest a regime of a regime like in the past where we have this massive expansion in liquidity. which drives new parabolas. For me, these liquidity catalysts are more so aligning to create some short-term liquidity. And at the same time, if you look at Bitcoin's price action, we are somewhat coming due for some type of retracement, right? And this short-term liquidity likely fuels this retracement, in my analysis and opinion. Okay, and then unless we get some type of follow through on the macro liquidity side to suggest that more liquidity is coming or the environment's changing, I expect Bitcoin to be putting in a lower high on the weekly, and that's the macro short I want to get involved with for continuation in the bearish trend. Okay, I've also called out on my Substack, along with the last 2 or 3 streams, what I need to see to be bullish. I won't go through it right now again, okay, but I know exactly what I need to see, and I will change my bias if I see it. Okay, I think we should all be able to do that as traders and investors. You need to know what you need to see to change your bias, and then back it, stick with it until you see reason to change it again otherwise, right? So know your systems, your triggers, and change your bias as your system tells you to do so. Right now, my bias is macro bearish, and I believe that these catalysts are going to potentially fuel that short-term liquidity, fuel that short-term counter trend rally, and into that macro lower high. Okay, so key themes, narratives into Q1, I've just written down here. Obviously, there's a bunch of different narratives. There's a bunch more narratives floating out there in the market. However, the ones that stick out to me are potentially midterms and the economy being juiced, right? Because obviously Trump will want to retain as many seats in the Republican Party as possible. So to do that, they're going to be juicing the economy, stimmy checks, all that kind of stuff, right? And that could be, if it comes into fruition, a reason, again, that powers the counter trend rally. And we've got the narrative floating around of new Fed chair, right? And again, that's going to be a Trump friendly, and the person who is the favorite right now, Hassett, I think his name is a very dovish Fed, we'll call it governor or Fed chair. He will be very dovish, is what's anticipated by the markets, and he's going to be just cutting rates and basically doing whatever Trump wants him to do in that space. Now, I'm not a political commentator. I can't tell you anything about the separation of powers between this and that and all that sort of stuff. I stay away from that stuff, but I just care as it relates to markets, right? So hence these 2 key themes are themes I'm also just observing, keeping in the back of my mind, as they can be some of the drivers of speculation and volatility in markets. But ultimately, it just comes back to price action for me. And again, just touching on those key things relating to price action right now is I'm being cautious of the front run volatility into the rate cut, which I believe is what we're seeing now. And I'm also just monitoring weekly structure, because many charts look like they are developing that next weekly high, right? You look at Pengu, for example, and if you were drawing structure, that's the structure. Now, where's the next? We need to move up to create the next weekly high. It's not just going to keep going down like this. Okay, so hence, again, that counter trend rally, we don't know how big it is. We don't know how high it will go. We ultimately know, unless Pengu gets above here, right, this structure is still bearish. Okay, you could argue that this bullish structure might still be in play, and this is an internal. But I mean, from a trader's perspective, if you're just looking at this structure alone, right, it doesn't really give you much to trade, right? How are you going to trade just that structure? Hence, looking here, layering in, I guess, using it for context and understanding that the current structure is bearish, you'd expect a tradable context to this chart is that, okay, maybe we might get that counter trend rally, right? And if you're of that opinion and potentially have your systems to trade counter trend rallies, then you might be trading here to here or wherever you believe it will go and looking for your signals. However, if you're only a pro trend trader, you might be waiting for that to come in, whether it's here, whether it's here, and you might be waiting for the short back down, right? But my point being, when you look at the weekly structures of many charts, if I just go, I'll just go based on price here. So we get Bitcoin. We'll start with Bitcoin, for example. You got weekly like this, okay? So it is due to put in some type of weekly high next, right? We go to ETH, right? Now ETH, arguably, weekly still bullish, internal bearish, okay? So at the very least, you've probably still got some type of move that needs to be put in, whether it's here to here, whether it's, further, something like whatever it is. But again, the weekly's due for some type of structure pivot, structure development, whether it's a retrace or otherwise. Same thing here when you look at the weekly. Now, the reason I'm out on the weekly here is because just to layer in that high time frame perspective, because if you're here on the daily, okay, and you're looking here and you're seeing levels get compressed and you get that flip and you're thinking, okay, cool, right, internally we're turning bullish, you got to remember this might just be turning bullish to develop this weekly high, right, this new weekly high before heading lower, okay? And this is typical of when we're moving into a bear market, right? Because the weekly, the macro trend wants to push lower into the bear market, right? So hence coming back to that, you got to keep an eye on that weekly structure, right? And just align your expectations. The context, the environment does not suggest that we should be going into new parabolas, right? Given the macro context and liquidity that I described earlier, does not suggest we're going into massive new parabolas. Hence, you don't want to get trapped thinking, okay, cool, daily structure, it's flipping, I'm going long, right? And I'm going for a new price discovery. Whereas when you look out on the weekly, right, and you're mapping price structure, then you could kind of align your expectations correctly and just be thinking to yourself, obviously, if you're a range trader, however you trade, just understanding the high time frame perspective means that, hey, we could get a weekly leg, trade the weekly leg, right? Given the context, we're not in the environment that drives parabolas. So if we are getting a decent counter trend rally and you want to participate in that, trade it. Right? Trade it from here to here, align your expectations. Maybe you use fibs, right? And you want to trade it to somewhere into the 50 level. The 618 is a very common retracement level. So maybe you're just trading this into here. Okay, it's just important to lay this context. Hence, macro bearish on Bitcoin. Macro bearish meaning the main trade I'm looking for is to trade that next weekly continuation down at least to the lows and then down into some sort of continuation levels, right? However, from here to here, when it starts putting in this weekly high, you can already see how altcoins are outperforming, right? Very rotational environment, very end of cycle, end of cycle. Okay, when you're getting a lot of these exit rallies in charts that are a lot of charts that are doing this, right? They had their peak, okay, and then you'll notice that. So if we just cruise out on Bitcoin, right, and I'll just put on total 2. Okay, so when you look at altcoins, and this is total 2. So this is the market, the crypto market cap excluding Bitcoin. If you look at the cycle, we had these major expansions where in each expansion on both Bitcoin, right, and total 2, so the whole market cap excluding Bitcoin, we had 1, 2, 3 higher highs. Now, a key dynamic if you understood this and identified this early enough during this cycle, a key dynamic is that altcoins haven't, every time we had these expansions, the entire market cap expanded with Bitcoin, right? For the most part, this is total 2. For the most part, total 2 followed, right? So if you're of the opinion or thinking that alt season just goes like this, right? Or just goes nuts at the end of the cycle, well, you've been wrong, because every time Bitcoin has expanded, the altcoin market has expanded and has outperformed Bitcoin. So the key dynamic you needed to realize early is that most altcoins, okay, I'm going to say at least 70-80% of altcoins had one season, okay? I call it a token season, right? They had their one season during one of these 3 legs, okay? And then after that season, every other expansion was a lower high for them. So for example, if they came out of their token generation event, if it was a new token, or this was the bear market, if it wasn't call it a legacy or an existing token, right? Some on this first major expansion had their massive move where they did their 10 to 100x, right? They did their 100x and then they corrected. And then on this second move, they did something like this, right? And then some of them even broke the base here. Then on the third move, they did this, or they didn't get anything at all, right? On this third move. So if a token had its 100x during this phase, what you needed to understand in this cycle and this dynamic is once a token had already had this major expansion, everything else was worse, reduced relative strength, and its major move was already done, okay? Because the nature of this cycle has been that these newer tokens or even older tokens have one hype cycle, okay, during one of these expansions. And by the time that hype cycle's done, okay, there's nothing else driving it to be able to achieve the same types of levels, because this was all the excitement, the narrative alignment, potentially the token's marketing and massive attention share. And then the attention shifted to the next narrative or whatever it was. And I'll give you some examples, right? TIA. I keep pulling up this one when I share this with people. Look, TIA had its massive expansion here. This was its 10 to 100x this season. Then in this second one, nothing. Well, not nothing, lower high. And third one, it hasn't even responded in that third major expansion, okay? Some tokens had their major expansion in the second one. So they did something more like this. They came out of token generation event. First one, they didn't do anything, or maybe they had a small rise. Second expansion here, they had their massive rise. Then third one was the relative lower high, okay? So when they had their second one, you got to realize that was their move, okay? And the relative high was giving you the sign that the hype cycle's dead. This is all people chasing. Now, the reason I share this with you is, as long as you worked out this dynamic, it means that you can still make money when these were happening. You just needed to realign your expectations for what was going to happen, right? So if you were here, for example, and you were expecting a new price discovery, you would have got burnt, right? And based on a lot of the a lot of people's responses on X towards the cycle, this is what happened, right? So many people got burnt because they saw this first expansion, right? And then they're not picking up on this dynamic that was its season, right? And it's not going to have a season every time the market cap expanded, right? But as long as you recognize this dynamic, you can still trade from here to here. And if it does number 3, trade from here to here really well, okay? Because while this was its potential 10 to 100 to 1000x in some instances, if you were bought way down here, these are still 200-300% moves, sometimes even 4-5x's. Okay, but you had to work out this dynamic so that you weren't bag holding, expecting at this level for this chart to go like this and then go into a new price discovery. Okay, so this was the main dynamic. So if we look at a few more charts, let's find, I'll just load up random charts that come to my head. Similar story here. AVAX, didn't even reach price discovery, but you can see it had some type of move here, and then every other higher high on the market cap and Bitcoin was a lower high. Okay, so what this leads me to share with you guys is, now as we potentially get the counter trend rally, if Bitcoin's going to put in a lower high as well, just have your expectations aligned correctly. That's why I'm directing you to the weekly structure, because if you're expecting this as Bitcoin's going to now do this, a lower high, with higher probability that it's going to be a lower high, then you're probably just going to get burnt again. However, if you have your context, if you understand the context correctly and the fact that Bitcoin is bearish, so it's more likely that Bitcoin's going to make a lower high, you can still trade this counter trend rally really well, having the expectation that maybe you're just trading to here or somewhere into here to get out. And you know that the macro short is going to be the bigger trade on the other side of these rallies. Okay, hence why I'm redirecting you back to the weekly, because following the weekly structure is where you'll see these playing out more clearly, this dynamic. So if I go back here, I'm just going to clean up this chart. Just delete all this off here. Take total 2 off. Let's just go through and we'll just flick through charts. I know this is a bit of a different session, right? We usually start with the macro, liquidity, but I guess because we're seeing that nice little pump and that bounce, let's just, off the cuff, let's just focus on some altcoins a little bit in this dynamic, right? So if we just flick through some of this coin, so remember I said 80% of altcoins will do that, where they'll only have one season. There are still going to be that 20%, that lower percentage of coins that are the stronger tokens that do also expand at every expansion. Now BNB being one of them. Right, now what I'm going to do is, let's just go through the weekly and just flick through some of these charts. You can see here, Bitcoin Cash had its major expansion on that first expansion, right? On the first market cap, relative lower highs, okay? Now you could argue here that it's building a potential base to, if we get the counter trend rally here, okay, if based on weekly structure, okay, if we get a counter trend rally, maybe it'll be to here, maybe it'll be to test here, okay? But again, if you're chasing here, right, and parabola for Bitcoin Cash, your expectations aren't really aligned with the current environment and context. So, right, so hence you can see that one, right? You can see it clearly. Okay, cool. It looks a bit more constructive, right? It's swept down here, so you know on the higher time frame, okay, we could be heading back up to here. XMR, this one looks parabolic and is still holding, right? So and this kind of aligns with the recent privacy narrative. So hence with this one, if we do see, this is probably one of the unique ones in the market right now, across the market, that if we do get the counter trend rally, it probably is going to finish off somewhere into price discovery, okay, and then likely crashing down, because look at how the chart's developed over this very long base and it's constantly creating high highs. It hasn't broken down like many of the other charts, We'll skip ZEC because ZEC is just completely distributing. Like, it looks ugly, horrible. Like, it's a massive move down. Right. Tau. Right. Again, if you think of that, what we discussed, relative lower highs, right? It's been ranging here for quite some time. So if you're trading Tau, right, for the counter trend rally, and you were expecting it to just zoom up here, my expectations, I don't see it, right? Unless we get those shifts in the macro and the liquidity picture to suggest the environment where we can go into a parabola again, right? And if you are wondering what would shift my bias on that, just go read my Substack. Okay, I lay it out here in net liquidity. I lay it out across the Bitcoin summary. Okay, in here I've got my stablecoin dominance key chart that I've been talking about over the last streams, and we need to see dominance coming down along with Bitcoin structure rebuilding into bullish structure. And what would make me change my bias? It's highlighted here, okay, where we rebuild some bullish structure on Bitcoin on the weekly, right? So if we come back here, Tau, right? If you're trading counter trend, it'd be it'd be a pretty big move if it was to break out from here. All right. What's that? It's almost a 2x. Okay. Aave, similar story. See how I painted it out before? Right, you got it coming out. It's had one of the big moves. So this is February 2025. So this was during the first expansion. So if I just throw Bitcoin over here, right? Well, I'll throw total 2, right? So we know the rest of what the rest of the market cap was doing. Okay, you see here the pattern. What did I do there? And I'll draw it in a different color. Let me just change that. Right, you'll see for Aave in expansion 1, it had one high here, okay, had its major move here. Look at that. Okay, now relative to the rest of the market cap making the new high here, Aave made the lower high, right? So is this weekly going to resolve somewhere lower here given the Bitcoin and cycle context and move lower, right? Because if it, as the data and structure suggests, we're transitioning to a deep bull market, and it doesn't mean a counter trend rally can't still be a significant rally. Even if you look during previous bear markets when we were transitioning, right? Look during this transition here in January till March 2022, you still had these major moves, right? That's what I'm potentially expecting somewhere here, okay? Because if you see on Aave, this is where the weekly turned bearish, and it hasn't really built its next lower high yet. So I'm expecting it to come somewhere into this range, within the bounds of this range, and then turn over again. All right. Sol has an interesting setup for me. I don't think Sol gets back above the highs over here, but I do think Sol is already showing some initial signs of sweeping this low here. And if you head out onto the monthly, right, from round about here, it was July, we started sweeping highs. Okay, usually when we start sweeping highs like this, price returns to the original candle's lows that was swept, right? So if we look back, let me just go back out into the monthly there. Okay, so if I just go back here, when you see lows swept, the target up here, target hit, okay? highs swept, target at least down here, hit in the same candle and lower, right? Lows swept down here, so I'd anticipate a target up here, hit, okay? Lows swept here, target here, hit. Now, since July here, we started sweeping 2 months in a row. Now we've started to have our move, so this was the candle that was swept. We need to resolve here, which we did last month. Okay, hence the setup one of the setups I'm observing is if we come down to sweep here, right, that would be if December swept November lows, that would be a strong signal that we wanted to come up to at least here. But even the fact that this is resolved now, I am interested in some lower time frame triggers on weekly, for example, to potentially just trade this weekly up into somewhere here. Right? But you see Sol also, if we put on the dynamic, came out of the bear market, and arguably Sol's, well, not arguably, the data even shows it a stronger relative coin. We had two massive expansions, considering where it came from, down $8-9 or whatever it was in the bear market, and considering it being a major, right, it had two massive expansions, but we saw the relative strength dip off here. Hence, as we transition to bear market, unless the macro bearish trend is invalidated, I don't see Sol taking out this high. I think it potentially comes back up into here somewhere at best before it rolls over, right? Realistically, yeah, right now I'm watching this area here to see if it also rolls over, aligning with aligning with Bitcoin in the current context. Like, you can just flick through these coins and see what I mean. Like this quant, it's just a massive range. I wouldn't even be touching it. Litecoin, where's this thing going? All right. AVAX. Okay, so if you just look at this weekly structure, okay, and since this high here, it's been down. Okay, so what does this suggest that it needs to do next? Okay, and this is somewhat of a descending triangle. Okay, this usually means this low is going to puke lower quite often, right? Actually, this was the bear market kind of accumulation before here. But when I look at this, I just see, I go, okay, well, it can't be bullish unless it gets above here on the weekly. Okay, so it needs to go from $12. It needs to go 4x to be bullish, right? And I just don't see it in the current environment. Hence, just following this trend, the weekly, at best, maybe it develops somewhere into here, and that would be a massive counter trend rally. Make over a 2x in the move there, before it then potentially goes back down to, do maybe its bear market thing before the next cycle. So that's that, right? Bit of a different stream, bit out of the norm of where we go through macro, the liquidity picture, the macro. We did summarize some of it. Basically, my main thinking right now and observations of the chart. Okay, if we just finish up on Bitcoin, yep, we're getting a bounce, right? As expected, like we've been discussing. Okay, we'll continue to observe what price action does here. And we are in the volatility window, right? So we are observing what happens leading into FOMC, and we should get that resolution on these liquidity catalysts that we're watching over the next 2 weeks, right? This week, tomorrow, we should start to see progress here. And if QT, the balance sheets are running off, we'll get more data from tomorrow. Next week, we'll get a rate cut. Next week, we'll get more data again. So by that stage, we'll be able to see if these liquidity catalysts are coming into fruition. And at the same time, if Bitcoin is still potentially basing and putting in bullish structure, that's our counter trend rally building, right? We're building towards that. But as usual, I'll be here daily at the Bitcoin close so we can analyze these things as we go and catch the moves as early as possible. Bias remains the same. Just summarize, macro bearish, but we are due for, at the very least, relief. And that relief could come by way of a massive counter trend rally if the liquidity catalysts come to fruition. Okay, that's what we're watching. Follow me on X. I post regular updates there. Jump on my Substack. It's all free. You can grab my full market update, and it covers all of this, this move that we've been anticipating. And if you got something out of this, please like, subscribe, drop a comment if there's anything you'd like me to cover in a future video. Appreciate you, and have a good one. Cheers.